Hi, everyone. Welcome to the Power Hungry Podcast. I'm Robert Bryce. On this podcast, we talk about energy, power, innovation, and politics. And I'm pleased to welcome back my friend and fellow Oklahoman, Robert Rapier. He is the editor of Utility Forecaster. Robert, welcome to your first appearance on the Power Hungry Podcast.
Thanks, Robert. Good to see you again.
Now, I don't know why it took me so long now, after more than 2 years, to get you on the podcast, but we're going to make it happen right now. I warned you guests on this podcast introduce themselves. So imagine you've arrived somewhere, you don't know anyone, and they ask you who you are, and you have about 60 seconds. Tell us, who are you?
Okay, I'm Robert Rapier. I grew up on a ranch in Oklahoma and decided that I wanted to do something besides that. So I went off to college, got a degree in chemical engineering, went to work as a chemical engineer. I have worked all over the world. I've worked in Europe 3 times on assignment. I've worked in Oklahoma, Texas, Montana, Hawaii, and now I'm in Arizona. On the side, I write, as you noted, I write Utility Forecaster, as well as 2 other publications for Investing Daily. And I also am a contributor for Forbes. And, you know, if I'm telling somebody overseas who I am, I usually will identify Forbes, because even overseas, they know Forbes.
Sure.
So that's what I do. I'm chemical engineer and I write.
Gotcha. And Hugo, Oklahoma is your hometown, if I'm not mistaken. Well, let's get something out of the. So now I think we maybe talked about this a long time ago. You know, I'm from Tulsa. Isn't it true that Barnum and Bailey Circus used to winter over in Hugo? And didn't they lose an elephant one time in Hugo, Oklahoma, that went missing for months? Is this true?
So I think it's Carson and Barnes. There's a circus that does winter in Hugo. And not only they lost elephant, they've lost lion before. I mean, we've got a big lake there in Hugo, and there's a lot of forested area around it. And that circus butts up against the wildlife area around the lake. So animals get out. They've got pretty nice area to hide in. And those elephants, there were 2 elephants got out, and they were there for like all summer before they got recaptured. They were enjoying themselves around the lake. And to this day, I
have to make the joke. Elephants on the lam in Hugo.
Yeah. There's an elephant sanctuary there. In fact, on the show The Voice, there was a Hugo, Oklahoma native on there, and Blake Shelton mentioned the elephant sanctuary there. He said, "I know the elephant sanctuary." He said, "We'll make a lot of money. We'll donate money to the elephant sanctuary there in Hugo."
Well, there you go. Okay, so now we got that out of the way. I had you on because, one, I've been following your work for a long time. We've been acquainted and friends for a while. You had a piece in Forbes just recently, and you're talking about the diesel shortages, and that had over 300,000 hits, which was a very large number for Forbes. I write for Forbes as well. So bring us up to date. I want to talk a lot about refining today and about the refining sector, because you have a lot of expertise there. So we're hearing a lot about the diesel fuel market now. What's happening and why?
So there are several things that are happening. And as I explained in the article, there are 2 things that happen this time of year every year. We go into high demand season. So let me take a step back. So our shortage right now is with distillates, and distillates are a cut of petroleum that make up jet fuel, fuel oil, and diesel. And we're going into high demand season for that right now because farmers are harvesting crops. So demand for diesel is up. And then people are putting in fuel oil for the winter. So demand is up there. At the same time, this is when refiners do fall maintenance. So every year, usually in spring or fall, a refiner will take their plant down and they'll do maintenance. And the reason they do it then is because it's shoulder season for overall petroleum demand and the weather's nice. Right. So you don't want to do maintenance in the north in the dead of winter when demand is at the lowest. So they do it in fall, they do it in spring. So those 2 things happen every year. But a couple of things have happened over the course of the past couple of years that have exacerbated this year's crisis. So one is that we've lost a lot of refining capacity since the beginning of COVID. And I'm sure we'll touch on that a bit later. But the other thing that happened is when Russia invaded Ukraine and we decided to stop importing Russian products, we lost a lot of not only oil, but we were importing heavy oils and diesel itself. So we lost 700,000 barrels a day of imports that would have produced diesel and distillates in our refineries. And if you look, people ask what's happened with gas prices. And I said, well, a couple of things have happened. But if you look at what's happened since Russia invaded Ukraine, that's when prices really took off, because we created a shortage when we said we're not importing any more Russian oil. And that created some disruptions in the market. Refiners had holes in their product slate they had to fill. I've talked to a refinery manager in California that I used to work for, and he said, we've had a real struggle here trying to meet demand for gasoline and diesel, because this Russian embargo that we put on their oil has caused us to be short distillates. So we're trying to shift production to more distillates. At the same time, that costs us gasoline production. And so, it's kind of a no-win situation there. They've got, trying to fix the diesel situation contributes to higher gasoline prices.
So let's run through that, if you don't mind. So you talked about distillates, and I generally think of them, or I hear the term middle distillates, but
yep.
You mentioned Jet A, fuel oil, diesel, kerosene is part of that same cut, right? So kerosene and Jet A are about the same, a very similar product.
Right.
So how is that different? Right. And you said that you have to switch from, and I know you spent a lot of time in refining, and this is one of the areas where the general public, I think, doesn't have a very clear concept about how any of this works. Right. So how is that trade-off work then between gasoline and diesel? Why is it producing more of one means less of the other? So
the gasoline and diesel, you can think about them in terms of a range of hydrocarbons. So gasoline, you can think about that as an 8-chain hydrocarbon, roughly. But it includes, butane, C4, pentane, C5. And so it's a mixture. And it's not all straight chains. There's branched hydrocarbons, so forth. Diesel, the hydrocarbon chain gets longer in diesel, but there's some overlap. So you will have some of those gasoline components, the high-end gasoline components will show up in diesel, and the low-end diesel components can show up in gasoline. And a refiner can shift a little bit of production back and forth, and also the way they operate the refinery, they can shift a little bit of production. It's not a lot. In the refinery I used to work at, it was about 5%. So we could take about 5% gasoline production and shift it toward diesel production and vice versa. So it's not a knob that can be turned, hugely one way or the other, but it gives a little bit of flexibility. Further, the kind of oil that you put through the refinery will dictate whether you're making more gasoline or more diesel. And what we were getting from Russia tended to make more diesel. And is
that a heavier crude that's more suitable for diesel then?
Yes.
Light sweet, which is what we generally produce here in the U.S., and we import heavy sour. The light sweet is better for producing gasoline, whereas heavy sour is better, more conducive to producing diesel. Is that fair?
Right, because light sweet tends to be shorter hydrocarbons. And so when you crack those, you end up with more molecules down in the gasoline range.
And when you say a shorter hydrocarbon chain, you mentioned diesel has a longer chain hydrocarbon, right? So is that a C8, or what's the basis of diesel?
So diesel would be more centered around maybe C15, C12, C15, C18s. So just longer, and it evaporates at a higher temperature. So if you put diesel in your gasoline car, it won't run because you're not getting the evaporation, and it takes more energy to combust the diesel, but then the diesel itself has more energy. And
is that right? So aren't diesel and gasoline pretty much on par in terms of their energy content on a gravimetric basis, or diesel's higher?
Gravimetric maybe, but not gallon. So per gallon, a gallon of gasoline has about 125,000 BTUs. A gallon of diesel has about 138. So, what is that? 10% more BTUs in a gallon of diesel.
Okay.
And one other thing, you can see how these products break down by the assay. You get an assay, and an assay will tell you when you process in a refinery how this is all going to split out. And you can see that a light assay and a heavy assay will produce very different product slates.
Well, it's interesting. I'm glad you made that point, because I've been presenting. I do a fair number of lectures and speeches, and I've been presenting on watt hours per kilogram, right? The energy density, gravimetric energy density. But you're saying the volumetric energy density of diesel is higher than gasoline. Gasoline may have a little bit higher energy density per weight, but per volume, diesel would have a slightly higher.
Well, and I'd have to look and see how it breaks down, but I like to use volume, and there's a very good reason for that. People will promote hydrogen as having a very high energy density per weight. That's
Right.
true, but it has a very low per volume. And
Right.
per volume is what you can put in a car.
Yeah.
So, the weight doesn't really matter unless you have a stationary application where the weight isn't really important. It's what you can stick in a car volume wise that really matters.
Right. Well, okay. So, that's a good point. I'd argue it's both, but I mean, you don't want to hold, I mean, there's one of the problems with electric vehicles, right? The battery weighs half a ton, right? So weight does matter, but I get what you're saying too. It's volume matters as well because you got to put it somewhere.
Yeah, I mean, in a car, you don't care about the weight of your fuel. You can only put so many gallons in the tank. That's it.
Right.
I
I
mean,
got you.
you are controlled by the volume.
Yeah, no, that's great. So so we've been talking around this, and I know this is a term of art in the refining sector. What's the crack spread?
So the crack spread is tells you what is the profit you would make off of a barrel of oil. So oil will split into, and I think it's like they do 3-2 crack spreads and 3-2-1 crack spreads. It's different breakdowns. So like a barrel of oil might make or 3 barrels of oil might make 2 barrels of gasoline and a barrel of diesel or something like that, like 3-2-1 crack spread. Right. And so you say, okay, for X input of oil, we've got 3 barrels and it's going to cost this much. And we output this. What is the spread between the product price and the volume and the input price and the volume? And that's the crack spread. And there's all kinds of crack spreads because, again, there are different outputs from that barrel of oil. You might produce more diesel for one and more gasoline for another. So you've got to know what crack spread is important here. So, WTI might produce more gasoline. So, your 3-2-1 crack spread may be more applicable in that situation. Whereas for a different oil, you might have a different sort of crack spread that you're looking at. It's just a gauge of profitability of refiners. It tells you refiners are making a lot of money here, or they're not making so much money here. When the crack spread is really large, refiners are making a lot of money. Even though that specific crack spread may not define every refiner, it's a good proxy for profitability of a refiner.
And the crack spread will will differ on the product being made, but more particularly is keyed to the type of crude input. Right. So Arab Light would be a heavier sour crude, or what are the Mexican? I forgot what the Mexican marker, the name of that, but or North Sea Brent. All these different crude grades have a different crack spread.
Right.
So let's talk about that, because that's one of the other things that to me is really interesting about the refining sector. And as I understand it, there's a mismatch. We hear all this talk about energy independence, and you and I have written about this before. Well, I'll ask that question first. Is the U.S. energy independent?
It depends on how you define energy independence. And I tell everybody that. Say, okay. What is your measure of energy independence? If you say, it means we produce as much energy as we use, and you say, yes, we're energy independent. We produce more energy than we use. And that's been true. We've been trending that direction since the shale oil boom really took off about 2008. We've been trending that direction ever since, but we reached that mark in 2020, and we lost some ground in 2021, but we still produced more energy than we used. Now, if you apply a different measure and you say energy independence means we don't import any oil, we've never been energy independent then, because we import oil, we turn it into finished products, and we export it. So I always make people define their terms. And I say, depending on how you want to define it, we're energy independent, or we've never been energy independent.
Well, so let's follow up on that, because that was one of the big keys of contention, bones of contention now here a few years ago, where the American Petroleum Institute fought very hard for, I think that there was a trade. It was an outright horse trading on Capitol Hill, where there were extensions of the production tax credit and in the investment tax credit, if I'm remembering correctly, or maybe it was just the PTC. And in exchange, the oil industry got a reprieve, or the law changed that allowed crude oil exports.
Correct.
But that was needed because we had a mismatch between domestic crude and what domestic refiners want. Am I remembering this correctly?
That is correct.
And tell me about why the crack spread then matters to domestic refiners, because as I understand it, they don't want light sweet crude.
Correct. So we'll go through that. So Obama signed that law into place, and people have asked me before, why are we exporting crude oil? Well, because Obama signed the law into place that allowed it to happen, and our domestic producers wanted to be able to export. Now, why? Because for years, our oil has gotten heavier and heavier, and the oil around the world has gotten heavier and heavier. So refiners have invested billions of dollars into upgrading the refineries to be able to process that heavy and sour oil with sulfur in it. And they make more money off of that oil. And I used to work in the economics group of a refinery, and I could tell you, it would cost us a lot more to process syn crude from Canada. We'd make a lot less money than getting the heaviest, most sour crudes we could from Canada, because we've invested in the infrastructure to be able to crack that oil. And so,
and if I'm going to interrupt, just that heavy sour sells at a discount then
deep discount,
West
deep
Texas
discount.
Intermediate. So the refiners can buy the crude at a lower price and turn it into high value products and then make a bigger crack spread.
So approximately a barrel of heavy sour will make about as much finished products as a barrel of light sweet. But that barrel of heavy sour, I remember when I was at the refinery, we could get that for $30 a barrel, and the syn crude was selling for $70 a barrel. So, and we're making approximately the same slate of finished products. So, hugely profitable, but it takes a lot of capital investments to be able to achieve that. And so when the shale boom took off, and what was being produced out of the shale fields was light, sweet crude oil, the refiners were like, we don't want that. We're not paying for that because we've already invested all this money into the heavy stuff. And so it would make more sense to export that crude and let us keep importing the heavy stuff that we've made all these investments for. And so that was really what happened with the allowing crude oil to be exported. Then it allowed for a better match for the crudes that we're producing now can go to refineries in places that can use it, and we can keep importing the heavy stuff that the refiners have invested in to be able to process and to make more money.
So then is it fair, I've used this term, that we are energy interdependent.
Absolutely.
We import a lot of energy. We export a lot of energy. If we just look at it on a mass balance or a balance of trade, we'd say, well, it's a wash. We're independent, but no, we're actually maybe even more interdependent now than we've ever been. Is that, or
that's correct. I mean, we are exporting a lot of finished products. If you look at our net exports have steadily, so like in 2005, I think our we net imported something like 13 million barrels a day. And shale oil started to put more and more oil on the market. And those net imports of petroleum and petroleum products steadily declined until they went negative. And petroleum products, we went negative on that in about, I think, 2012 or 2013. So that means now we're exporting more gasoline and diesel than we're importing. But then when you throw crude oil into that went negative in, I believe that was 2019, 2020, when that number went negative. So if you add it all up, you add the petroleum and the petroleum products, we're now exporting more of those than we're importing.
And Mexico is one of the big markets for that, right? We import a lot of Mexican crude, Campeche. I don't know if it has a certain, I've forgotten the name for that blend of crude, but particularly from Pemex. Pemex is short refining, and so they export their crude to the U.S. We turn it into gasoline, send it back to Mexico, and is that? I guess it was true for Venezuela, but not true anymore. Is that right? The Citcos had to sell their refineries, or they did sell them, or I'm losing track here. But the Mexico is that right on Mexico?
Yeah, I mean, Mexico's a big market for our finished products and for natural gas. I mean, natural gas to Mexico has been booming over the years. So, as our natural gas has ramped up, Mexico's become a very, very important trading partner there.
Right. So we've talked about some of the mechanics here, and these are things that you would know if you're in refining. But I wrote this question down, and I'm going to paraphrase it. I'm not going to read from it, but why is it that there is so much demagoguery around the oil business? I mean, we've seen this in particular. I'm not a Republican. I'm not a Democrat. I'm disgusted, right? But this administration, I've seen more demagoguery, more lambasting, more vilification of the oil industry than any administration I can remember in my lifetime. And I'm an old man now.
Yeah. The funny thing is,
why is the oil industry or oil in general so vilified? And yet, I mean, as I put it, we love our cars and we love gasoline, but we hate the oil companies. How do you see this? You've seen it
Right.
for a long time now.
Right. And you know where you don't see it? You don't see it overseas. You don't see it in the Netherlands where Shell is a huge presence. You don't see them hating their oil companies over there. It's unique to us here. I have always wondered what came first: the Democrats bashing the oil. And let me make it clear: I'm registered independent. I'm neither Republican or Democrat either. But you're correct. The Democrats, the oil industry contributes more to the Republicans,
Sure.
and the Democrats bash the oil industry. And I always wonder which happened first. The Democrats start bashing the oil industry, or the Republicans contribute more to the party that doesn't bash them as much. I think it's that they make an easy target and the public does not really understand. You see Biden stand up and talk about all these profits that the oil companies are making and demands that they bring down prices. That's not how any of this works. And he either doesn't know that or he does know that and is just playing politics, because the oil companies aren't in control of oil prices. They're not in charge of finished product prices. That may seem crazy, but it's not like an iPhone. Apple makes an iPhone. They decide we're going to sell it for this. These products trade on the open market. So I've said an analogy would be, it's like asking Apple to lower their stock price. You'd say, well, that's preposterous. Their stock trades on an open market, and so does oil and gas and products. They trade on an open market. So it's not the oil industry setting prices. If they were, they'd never lose money. I mean, big oil lost $70 billion in 2020. They would never lose money if they could just set prices. Oil prices would have never gone negative in 2020 as they did if they could set prices. But I think the public doesn't understand very well. They think that ExxonMobil in a cigar-filled room is deciding what to charge for gasoline this week, and they lick their chops and we got a shortage so we can charge more. And so politicians realize that's an easy target. It is true that they're going to make a lot of money when there are shortages, but that doesn't mean that they are
manipulating the market.
They don't manipulate the market. I mean, there's been some odd cases where BP got caught trying to create a shortage in a propane market in some area. Right. There's some case like that, but there's nothing widespread. There's not collusion. Collusion's illegal, but people imagine that it happens. They imagine that the CEO of Shell calls CEO of ExxonMobil, and they get together and they decide, hey, let's withhold production here and create a crisis. And that doesn't happen. That's I was in the economics group at ConocoPhillips, which is now the Phillips refinery in Billings, Montana. And we had meetings every week where we try to figure out where are prices going and how do we need to run the refinery, going into the fall now. Okay, we think diesel is going to be short this year. We're going to try to make as much diesel as we can. Where do we think it's going? What are our projections? We could have just called the CEO, right, and said, hey, where are you going to set prices? But it doesn't. Nothing works like that. We look at numbers from the Energy Information Administration. We look at inventories, and we look at the local market, and we try to project this is where things are going.
Well, I'm glad you mentioned that, because I think I've toured that refinery in Billings. It was a long time ago now, and I met one of the managers, and he invited me to come. And I thought, heck yeah, I love that big iron stuff, and walked through it. But that was one of the other things I got this question the other day when I was presenting, and they said, well, how is the U.S. going to do in terms of energy policy? And I said, well, U.S. is a big place. This is a very regional business. And you made that point just now. So there are these regional refineries. There's one in Salt Lake City. There's one in Billings. They're serving a regional market, and they're not exporting necessarily. They're not selling their gasoline in Miami. They're selling it in the local marketplace. Right. So that's the other thing. I mean, so I'll ask the question this way. These refineries, do they have a certain set territory that they know that they're going to sell to? Or how often do they think, oh, we'll export this to the East Coast or West Coast? Or are they really focused on the areas around them and servicing those needs in that territory? How does that work?
So I'll take Billings, for example. Billings could get product down to Denver. It could get product to certain areas because it's served by pipelines. But it can't get product into California. So it doesn't really matter how high prices go in California. Billings Refinery cannot get product to California. There's not the pipelines. And what could happen is a jobber could buy a load of gasoline and haul it to California if the product differential is great enough. But then California specifications are different.
Right.
So essentially, that's an island unto itself. You'll see most of the product from the Billings refinery. You can draw a circle around Billings, and it's mostly in that area. But some gets out a little further. You do have these jobbers that will buy, a truckload of fuel and take it a little bit further afield if the product prices there warrant it. But mostly, it's a very regional market. As you said, they're not. And if you get closer to other refineries, like if you get down into Texas, you've got plenty of refineries servicing that. So the Billings refinery cannot get product down there competitively down to that area. It's limited by the pipelines that go out and the distance, because
Right.
even you can't, if you don't use pipelines, you got to use trucks and rail cars, and the further you have to ship, the more competitive a refinery in that area you're shipping to might be.
Right. So, is that, and there's a general ignorance about the liquid products market, but is that, does it extend? Let's broaden it out to just talk about energy more generally, because you and I've written about different parts of the energy sector. It just seems that I'll ask it this way. What does the public misunderstand the most? Where is the ignorance of energy the greatest in your view? I mean, you've been writing about these for a long. You have any ideas about that? About why the ignorance is so big, and what do the people just not understand about it?
So I think what they don't understand is really how prices or products are priced. And so they see the product at all they care about. Really, most people only care about, our service station has fuel and it's at a price that I like. And I will always see interest in my articles will spike when there's shortages and the prices go high. And most of the time, people just don't care. All I care about when I plug something into the wall is electricity coming out of it. And if electricity prices soar, I might start reading up and see, okay, what's happening? And I see that right now. The diesel shortage, I wrote about that because, okay, well, that's, there's some interest there. And I can see from the keywords people are searching, people hear about it on the news and they go to Google and they say, why do we have a diesel shortage? And that's why I titled my article, Why We Have a Diesel Shortage. And so a lot of hits coming in on that. I think it's just the retail market that they don't understand. They don't understand how product gets priced. They think it's something other than it is. And they don't realize, I wrote an article today about refineries shutting down. People go, how can refineries shut down when they're making billions of dollars? Well, they don't have a crystal ball. They don't know where things are headed. They can see that our energy policy is pretty hostile toward oil and gas. And so if you're going to have to invest billions of dollars to upgrade your refinery, and you are seeing a declining projection for what you're going to be able to sell, even though profits are good right now, you may say, well, over the next 10 years, though, they're more often than not going to be good. And so, we're going to shut this refinery down rather than invest $1 billion to keep it running.
Well, let's talk about that, because you reproduced an EIA chart in your piece in Forbes on refinery shutdowns. So we have 1.1 million barrels a day less capacity, refining capacity today than we did just in 2020.
Right.
So, and this is it's often referred to as a marginal supply business, right? So can you explain that, why that, that, as I understand it, it's that marginal bit of supply that determines the price. So even a very small change in overall availability of supply, 1 or 2%, can have an outsized impact on price. Why is that?
Okay. So this is a good question, because I get this sometimes. People go, how can a 5% shortfall in supply create a 50% increase in price? And I'll say, well, at what price are you going to stop buying gasoline? And somebody might say, well, if it got to $4, $5, $6 a gallon, I'd stop buying gasoline. So how are you going to get to work? Well, okay, maybe I might pay a little bit more than that. Well, tell me what price you will stop paying. And that's why a very small shortfall in supply leads to outsized increases in price, because demand is very inelastic in the short term. Right. In the long term, sure, if you thought gasoline prices 10 years from now are going to be $20 a gallon, you might make some very different choices right now to be prepared for that. You might get an electric car, you might move closer to work. There are lots of different things that you might be able to do. But in the short term, your hands are kind of tied.
Right. Well, and as you said that, what price would I stop buying gasoline at? $20 maybe. I mean, to me, it's, that mobility,
right.
The mobility is the game. Right. And I've thought about it a lot in terms of I wrote about this just the other day, this idea of just stop oil. And I wrote, well, if oil didn't exist, we'd have to invent it. And I wrote that in my fourth book, Power Hungry, now 12 years ago. And it's true. If it didn't exist, we'd have to invent it. But it's almost a miracle substance. And that's the part that to me is also rather amazing is these continuing attacks on the industry, which I get it. I mean, I've studied this for a long time, right? This is from the Democratic playbook. And I'm not saying this just to be, I'm not a Republican either, but it's just, we'll demagogue against the oil industry because it's easy. And it's the same kind of with the electric utilities. We'll just bash the electric utilities because they're there and they're not going to say anything back because they have to deal with us and we're the regulators. But it's this willingness to just suspend any kind of credulity in terms of that what actually is behind this industry that is incredibly complex. Well, let me ask this question because as we're talking, the other thing that seems to me about the oil industry that's so remarkable, one, how big the industry is in terms of the trading that happens around it. And do you have any numbers on that? What that value is? It the most traded global commodity? Is there something else that's in second place?
Oil is the most globally valuable traded commodity. And I've said before, just getting back to the comments you just made, can you imagine what would happen if the oil industry just said, we're going to stop producing oil for a bit? I think people have no idea just how everything runs on oil. The whole world runs on oil. And if we didn't have it, and people gripe and they complain, but they can still hop on a plane and fly halfway around the world for not a fortune, but if that was not available, if you simply couldn't get fuel, our whole way of life people would start to starve. I mean, within 30 days, people would start to starve to death because the whole global transportation infrastructure and, moving goods around, it would all just cease. It would stop to move.
Yeah. And that's well, yeah. And I was flying out of Atlanta. I did a short video on this the other day. We ride on rocket ships and we just take it for granted. I mean, these airplanes we ride on they're just incredible machines. And we put 100, 200 people on these things and people complain, oh, my ice isn't cold enough, or I got the wrong seat, and they go ballistic. And I'm thinking, sit down and shut the F up. You have no idea how lucky you are compared to the travel my grandmother did as a child. I mean, what are you doing? It's a miracle what we're able to do with our mobility, and it's all due to oil because it's so energy dense. I mean, it's just a remarkable product. So tell me what you're bullish on. This is you write for Utility Forecaster, which explain that publication and what that publication is about.
So Utility Forecaster, despite the name, we cover investments in income sectors. Mm-hmm. So in addition to utilities, my best performers of the year have been the energy companies. My best buys for most of the year have been Chevron and Shell. The energy companies have made up a disproportionate amount of what I have these best buys in the growth category and the income category. And the energy companies have been a disproportionate part of that for probably a year and a half. And as a result, we've vastly outperformed the S&P 500 because we are overloaded on energy right now, and the energy companies have done very, very well.
So to put it short, Utility Forecaster is a stock tip newsletter.
It's we actually have a paper portfolio that we manage. I have recommendations on buy, sell. I have these best buys that I update every month, and that's based on outlook and current price. And I'll have 5 in the income category. So we've got an income portfolio and a growth portfolio. One is income has higher yields and lower long range upside, and growth has more long range upside. And so I'll have best buys in both those categories. But we cover. Archer Daniels Midland is one of my best buys, and it's done very, very well this year. And I've got renewable companies in there. in the long run, I am bullish on renewables. Despite that, there's been a lot of fraud in that sector, and I cut my teeth covering that sort of fraud. But in the long run, I wrote an article in 2007 that said the future is solar. In the long run, that's where our power is going to come from. A lot of our power will come from solar, and it'll come from more nuclear, and the reason the U.S. has had the largest decline in carbon emissions over the last 15 years, and people think it's renewables. It's actually natural gas. And I know you've written a lot about natural gas and the switch to natural gas. So I'm bullish on all of those. I know a lot of environmentalists say hate natural gas and they would like to jump directly from coal to solar, but that's not really feasible. But nuclear, if we went from coal to nuclear, natural gas, and renewables, we continue to reduce our carbon footprint. So I'm bullish. I think nuclear, I think eventually that's going to be, they're going to have to say, if we're going to do something about carbon emissions, there's no way to get there without nuclear power. Right. And I've written several articles for Forbes on that topic. And Jigar Shah, who's head of the Department of Energy's loan program, he chimed in and said, we've run all the numbers and we agree. And you can't get there without nuclear. And these people will pop up and say, oh, yes, you can. We can do it all with solar. No, you haven't done the math. Right. We have to have something like nuclear power, and China even more so. If China and India are to ever reach the sort of energy consumption that we have, that's the only way they're going to be able to do that without cooking the planet is nuclear power.
Agreed. And in fact, I just wrote a piece that's going to be published, I think, tomorrow on coal demand in China and India. India is increasing their coal fleet by the size of their coal fleet by about 25%. They're adding something like 50 gigawatts, and China's building a new coal unit a week. I mean, I thought that growth had slowed down, but apparently it has not.
It took a little stumble during COVID, but sure. Yeah, the long range is still, they're going to use a lot of coal.
So but in talking about utility forecaster, you're a stock analyst. How do you go about that? How much of this is by your feeling? How much of it is your deep dive? You're a chemical engineer, but are you trained as a stock analyst? How do you know which ones are the right stocks and how, what? I don't know. I can't double check your performance, but apparently it's doing well. How do you pick them?
So let me take you all the way back. Take you all the way back to growing up poor in Oklahoma.
Okay.
And watching my grandparents, they retired with nothing but Social Security, and it's an impoverished region. Most people don't get out. And I thought as a kid, I don't want this. I want something. I want to be able to build wealth. And I was in algebra in 9th grade, and our algebra teacher showed us compounding. And that's the first time I ever said, I'm going to be rich someday. I've got the time, and even with a very modest rate of return, if I'm disciplined, I can build wealth. And I started out in the 1980s investing in the stock market. And I was investing in mutual funds before I got out of high school. I was there for the stock market crash of 87. I'd been picking stocks for a very long time. So no, I'm not trained as a stock analyst, but I've been doing this for a very long time. So
since your days in middle school in Hugo,
in high school in Hugo, okay. I was fascinated with the market's ability in the long run to build wealth. Because if you look at the long-term performance of the S&P 500, you can get rich on that performance if you are in for the long haul. You don't try to jump in and jump out. I answer these questions to people all the time. Oh, my stock went down 20%. Should I sell? No, you shouldn't sell. The long-term fundamentals of the company are good. So you ask, how much of it is feeling? None of it. I have a ranking system, and it's all based on estimates and analysts. And so I've got an institutional investor ranking. I've got an individual, like a Goldman Sachs ranking on companies, like those kinds of brokerages that rank companies. We look at target prices. We look at safety of dividend. All those things go into an objective a ranking. And so every month I will rank all the companies, and the 5 best buys are the top 5 companies. And I don't mess around with that. I've got an algorithm that works and has outperformed the market for a long time. And, sometimes we'll have hiccups. Shell in 2020, that cut their dividend, even though they were ranked very highly, and that hurt. But even then, Chevron was ranked higher. So Chevron, we stuck with Chevron. Chevron has performed very, very well. That's the objective ranking. They simply rank higher. So,
and is one metric given more weight than it, like price to earnings ratio is kind of one of the, the standard metrics that people use then to value stocks. Is there one metric that you have a higher weighting than any other?
I tend to look at estimates. The companies will give guidance, and then analysts will come in and they'll tweak that, and they'll. So when I look at a company, I'm looking at maybe 20 analysts looking at that company and saying, here's our estimate on the company, and the company themselves saying, usually a company's guidance is pretty correct. Yeah. Sometimes a company will drastically reduce guidance, and that slams the company, but there are things like that. Is there one factor? I've got like 5 factors that go into ranking them, and one is not really above the other one. I look at distance to fair value. So I'm looking at how undervalued a company is. So where's the price relative to where is the fair market value, which is what these analysts are doing. They're looking at, here's where fair market value is based on cash flows and so that's something that's very important to me. Cash flow. I look at cash flow. So, right. Company can massage earnings. They can do all kinds of things with earnings. And sometimes you'll see an oil company report a huge loss, which wasn't really a loss because they just wrote some reserves off the books. So it didn't affect their earnings at all. They can put them right back on the books depending on oil prices. But cash flow tells you everything. Cash flow says how much money did we bring in and how much did we spend.
Right.
And so that's a
EBIT,
very
so EBITDA is that key metric then.
Yeah, but even then, there are things that they can do with depreciation amortization that will can distort what the real picture is. So yeah. So I look at the cash flow. What are revenues? How are revenues going? Revenues aren't everything because sometimes a company can outspend their revenues, significantly. But the bottom line is cash flow. A company that is increasing cash flow and they can cover their dividend is not a company that's going to go bankrupt. It's a company that's going to continue to do well. And I'm not looking. I've had some very, very big performers at Investing Daily. Daco New Energy is a polysilicon producer out of China. That was a 10-bagger that I picked. Solar Edge is a solar inverter manufacturer. They were a 10-bagger that I picked. Some of these companies have done very, very well. But more often than not, it's the companies that make long-term returns of 10 to 20%, and you can get rich in not too long at those kinds of returns. The other thing is, so I'm targeting an 8% overall yield, and I do that by selling covered calls on these companies. I don't know if you're familiar with covered calls, but you're selling somebody the right to buy your stock at some price higher than it currently is, and so when I compare the dividend yield, which could be 2%. And add in the covered call yield, which might be 6%, I'm trying to target an overall yield of 8%. And I've done that. I yield more than 8% on these portfolios by selling covered calls. And we've been very successful with that. There was a study done a few years ago that said a covered call strategy will outperform the market under nearly every condition. The only condition where it underperforms is in a sharp upward move. In a sharp upward move, the share price will go past your strike price. And so if the market moves up 20% in 6 months, you're going to underperform the market. But every other time, lower performance than that, flat performance, down performance, you're going to underperform the market. So I outperform the market. With covered calls. So Investing Daily launched a new product called Income Accelerator that I write. And first year, we tripled the performance of the S&P 500. We've done very well. We consistently over every time frame. Of course, we've been in a bear market for most of the time that right. We've had this thing launched, but we've significantly outperformed the S&P 500. I've had stocks that went down 20% that we're up 20% on just because we've sold all these covered calls. So you can see a stock price go down and still make decent money with this strategy.
Huh. It's interesting you mentioned the cash because it brings to mind now it's 20 years ago. In fact, 20 years ago, last month, I published my first book, which was on Enron. And some of the best advice, I did 200 interviews when I was writing that book. And one of the best things, maybe the thing, the bit of advice I got from an accountant who had worked at Enron, wasn't there anymore. He said, it all comes down to cash. He said, You have to follow the cash, and you have to find out where the cash is and if they're making
Right.
cash, because
Right.
that will tell the story. And that was what led me then to read every quarterly report and find out, they were cash flow negative for 19 out of the 20
Right.
quarters, I think, right
Right.
before they went
You
bankrupt.
can't, and you can't do that. And there's another very important lesson from Enron, and that is diversify, because there is one a very important story there out of Enron. There was a secretary there that took all of her stock options and everything in Enron stock. And on paper, she became a multimillionaire,
Right.
and she rode it all the way to zero. So, no diversification, all eggs in one basket. And that's the other thing about my publications. In my income accelerator, we try to equally diversify across all 11 major S&P 500 sectors. So we will see, the technology sector has gotten just brutalized this year, but our energy sector has helped us offset that. We've had some sectors have done okay, some have done better than the S&P 500, but overall we've significantly done better than the S&P 500. And I tell people, they say, isn't trading options risky? So we're not trading options. We are selling calls. That is less risky than owning stocks, because you are reducing your cost basis. So if I have a stock trading at $18 and I sell a call on it at 20, that means if it's above 20, I have to let my shares go, but I get paid for that. So it reduces my cost basis from 18 to maybe 16. So instead of buying the shares for 18 on the market, I bought them for 16 because I offset. And the only consequence there is, if shares are above 20 at expiration, I lose my shares at 20. That's why in a sharply upward market, if the stock is 24 in 6 months and I've sold that call at 20, I still have to sell my shares at 20. So it's a really good, nice strategy. It's a conservative strategy. And I tell people that it's a very conservative strategy.
Gotcha. So let's go back to the discussion about fuels and so on. You and I first, I think, became acquainted, excuse me, in writing about ethanol and biofuels.
Right.
And
that's how I cut my teeth.
And I've been a longtime critic of this whole concept of biofuels, and yet it still is continuing, and in fact is gaining speed. There was a recent report from I think it was JP Morgan about particularly oil seeds, and about the oil seeds and how the push for more renewable diesel could overwhelm that market. And that because it's just distorting the entire market for edible foodstuffs. What's happening today in the ethanol market? And then I want to ask you about Kyor and Vinod Khosla. What's happening with corn ethanol? And the second question, why hasn't cellulosic ethanol ever taken off?
Okay, so those are good questions. The ethanol market in the U.S., we've got the renewable fuel standard, which is a mandate that we have to use renewable fuel. So the ethanol industry is propped up by that mandate. And people ask me, what would happen if you took the mandate away? Well, the ethanol market would probably get cut in half in the U.S. There is a natural market for ethanol as an octane enhancer. We would buy it sometimes at ConocoPhillips if we needed to boost the octane of gasoline. There are other octane enhancers that aren't ethanol, but ethanol is competitive in that market. But that's only worth like 3 to 5% of the overall gasoline market instead of the 10%, which is the mandate. So, the renewable fuel standard helped create an ethanol market, but it's also created a larger market than would exist without that standard. And
so let me ask about that, because the octane boosters, because this is one of the things that, I've gotten some hate mail and some longtime haters who continue to come back to me about, how they hated my book, or, published 14 years ago, something like that. But you don't necessarily need ethanol to make high octane gasoline.
Right.
Is that what you're saying?
That's right. Correct. I mean, there are other octane enhancers, and
such as.
Well, methanol is a perfectly fine octane enhancer, but the ethanol industry, it's funny to watch them. When you bring up methanol, they'll tell you all the reasons methanol is terrible. And it's simply a matter of, you can produce methanol for cheaper, and it's a good octane enhancer. But toluene is what we would use at ConocoPhillips sometimes. Toluene is a really good octane enhancer. And there are certain things
but that's very volatile, isn't it? Toluene. I mean, that you use that as a solvent in, I use some in getting some, some adhesive off of something here in my, my house the other day. It's a very volatile substance though, right?
Not when mixed with gasoline. I mean, it's,
okay.
Butane can exist stably in gasoline if it's mixed at a certain concentration. It exists in gasoline. But butane, can't exist as a liquid in an open vessel out in the air because it'll evaporate. But in gasoline, it can exist.
And so butane is an octane enhancer, and so is toluene.
Now, butane is so butane. What happens with butane, because it has a very high vapor pressure, it tends to be blended in low concentrations in the summer and high concentrations in the winter. And so this is another refining thing.
Yeah.
People ask why prices go down in the winter. There's two reasons. One is demand goes down, but the other is we can blend butane in the winter at higher quantities, and that increases the gasoline supply. So instead of the 2% you could blend in the summer, in the winter, because the temperatures are lower, we could put 10% in there in the winter, and that boosts gasoline supplies every winter.
And butane is less costly. Butane is a natural gas liquid.
Right. It's cheaper to produce gasoline in the winter for that reason.
I see. Okay. So toluene, then you can make methanol. There's a fairly easy technology to turn natural gas into methanol, as I understand it as well.
Correct.
Right?
That is correct. That's how most methanol is made. And California had a methanol program for 25 years, and they shut it down when the renewable fuel standard was passed because they said, well, we can't compete with that mandate. So methanol would be trying to compete, with ethanol, which has a lot of advantages because of legislation.
Right.
Now you ask about cellulosic.
Well, let me just ask one more question about ethanol. So the part that sticks in my craw is there are a couple of them. One is the low energy return on energy invested in ethanol, which, I've studied literature and might be a wash, right? And to me, there's a lot of discussion, and Tad Pacek and others, this is just BTU laundering. You put in this many BTUs, you only get that many BTUs out. We're not getting some significant increase. How important to you is it, or how significant is the turning of food into motor fuel? Does that bother you?
If there's enough food, I guess it's okay. If there's enough food, then you can use some excess and energy return on energy invested. I think ethanol is close to 1, but it's probably positive, but it's not positive in the way like gasoline is positive. I mean, gasoline is, that's a 10 to 1 energy return on energy invested, 5 to 1, 10 to 1. Ethanol's maybe 1.3, so it's down there pretty low. So your question about cellulosic ethanol,
right?
And I tell people,
walk us through the cellulosic ethanol story, because this is now 8 years ago, roughly, or maybe 10 years ago. There was a craze around cellulosic ethanol. Some of it, I would argue, started with Amory Lovins back in the 1970s, but it reached a crescendo about 10 or 12 years ago, and there was a lot of money put into the state and federal level, including into a company called Kyor. So I just wanted to set the table for you on that. Go ahead.
Right. So, I think Vinod Khosla was probably more responsible than any other person for pushing this cellulosic ethanol onto the public and for getting it into the renewable fuel standard. And, I saw some of his projections, and he's basically assuming Moore's law, the computer law, which says, computers get faster and faster and cheaper. And he used that, and he said, we're going to make more and more corn per acre, and it's going to cost less and less, and we're going to produce more and more gallons per bushel. And he created out of thin air 200 billion gallons of cellulosic ethanol. So we're going to run the whole country on cellulosic ethanol.
And Khosla, just as a brief aside, is made a lot of money in Silicon Valley as a VC investor with Kleiner Perkins, I think is the firm, right? Yeah, okay.
And so I emerged early on as a critic of his because I said, this is not how any of this works. And I said further, we've known how to produce cellulosic ethanol. And what is cellulosic ethanol? So cellulose is a long chain polymer sugar, and it makes up the structural material in wood. And if you break that down, like adding a strong acid or enzymes, you can chop that up into sugars, you can ferment that, and you can produce ethanol. So it sounds simple enough. In reality, it's pretty hard to do. And so in 1920 in the US, there were 2 commercial cellulosic ethanol plants. They knew how to do it. They knew how to break the wood down into sugars, ferment it, and then produce ethanol. The problem is that is very expensive. It's very energy intensive. The yields are low relative to sugarcane or corn ethanol.
Right.
And so where you might be able to produce corn ethanol for $1 a gallon, you're probably talking, $6, $8, $10 a gallon for cellulosic ethanol. And the reason is when you go through all these steps, not only are there more steps and it's more energy intensive, you got to cut a tree down, you got to chop it up, you got to process it with acid, and then in the acid, you get all kinds of cats and dogs. So you're trying to ferment these sugars in the presence of all this other stuff. And you end up with something that's like a really weak beer. And I tell people, if you want to really understand the issue with cellulosic ethanol, go to the supermarket, buy a case of Budweiser, and there's your fuel. Get the fuel out of there. Get the ethanol out of there. That's what you're dealing with cellulosic ethanol. You're dealing with a 3 or 4 or 5% solution of ethanol that has to be extracted at great energy cost, and it's not viable. And so I pointed out these plants in the 1920s, they shut down because the economics were bad. We've known how to produce cellulosic ethanol forever. It's just, if there was a Moore's law, it was exhausted 100 years ago. And this is what I tried to convince Khosla of. And, we still produce, relatively next to no cellulosic ethanol today. And if not for subsidies, we produce absolutely nothing. I mean, mostly still in the lab, and people are always hyping, different breakthroughs. But but
it's just a poor feedstock. It's just a dilute feedstock that energy, that form of energy coming in the factory door, whether it's wood pellets or sawdust or trees or whatever, it's just a bad feedstock.
Right. The energy density is low.
The best line I heard on that, now I've forgotten his name off the top of my head. He was at the University of Denver. He said, look, if for all of human history, we've been fermenting stuff, right? And potatoes and grapes and, apples and, fruit of all kinds to make alcohol. He said, don't you think if we'd learned how to do this out of sawdust, we'd be doing it by now? It was just this kind of, he was laughing about it saying, if we could make it out of this, low grade or lawn clippings or well, hell yes, we'd be making beer out of it, but we're not. Instead, we're still on grapes and apples and all these other things, plums and all the other things that we use to make booze from. I think that was actually the term that he used. So then what is happening? You were involved in the litigation that was against Khosla. What has happened to that? You were an expert witness. I mean, this is a long time ago now. How did that case get resolved? Didn't he get sued by the state of Mississippi?
He got sued and he settled with the state.
He did. So that litigation's over now.
It's over.
Okay.
He was sued for making all kinds of false representations. They took, I think, $75 million from the state of Mississippi. The state hired lawyers.
And this was Kior, right? Kior was the name of the company. And there were other companies that were similar, right? That were claiming
many companies. I don't think Khosla has ever made any money on biofuels. Kior was the company that they called me, 60 Minutes called me to interview me. They had him on, they had me on. And I'll never forget the first question Leslie Stahl asked me. She said, Vinod Khosla is a very smart man. How could he be so wrong about this? And I said, he is a smart man. I said, would you let him operate on your heart? And she said, no. She said, no. Okay, I get it. I get it. I said, he's a smart man out of his field. And so he's making all kinds of representations that aren't true. And she asked me then, what's going to happen with Kior? And I said, I think they'll be bankrupt by the end of the year. And they didn't play that clip, but they were bankrupt by the end of the year.
Right. So that's been resolved. So I lost track of that. When did he settle? And was it a sealed settlement, or do you recall?
Yeah, I think so. The lawyers got a hold of me and they said, destroy everything that I've got related to the case, and don't talk about anything that I've saw. I saw my name repeatedly in their internal emails. They were trying to figure out how to discredit me. That was when I was criticizing the company. They were sending emails back and forth and saying, how can we discredit this guy? This guy's out criticizing us, and how do we address this? And that was
that when
it's hilarious to see those emails. As an expert witness, I'm flipping through there and I see my own name coming up in their documentation.
So was that when were you writing about it for Forbes, or was that oil price, or were you writing for that?
I started writing about that on the oil drum back in like 2005, 2006. and I wrote a lot of critical articles. Khosla offered me a job at one point. He reached out to me on Twitter and said, if you've been critical, but if you want to come help us make this work, the door's open. And but then after a while, he blocked me on Twitter. I'd forgotten he existed. Somebody brought his name up the other day, and I was like, is he still on Twitter? And I looked, and he's still there, but I'm still blocked.
Well, let's mention that for just a second, a quick station break, because we're almost at an hour now. My guest is Robert Rapier, my friend and fellow Oklahoman, Robert Rapier. He's on Twitter at @rrapier, Rapier. He's the editor of Utility Forecaster. He also writes regularly for Forbes. So you've been, I just want to touch back on you mentioned Utility Forecaster. Any stock tips then? You see, you've already mentioned Chevron, Shell. Are you long hydrocarbons? Is what I'm gathering you saying?
So right now, hydrocarbons. So I should clarify. And in the long run, I realize we've got to get off of oil. I know this. I mean, I see the CO2 increase in the atmosphere, and I am very concerned about that. So there's the part of me that's realistic and realizes we're going to be on oil for a while, and there's a part of me that says absolutely we have to move away from oil. This is the CO2 increase in the atmosphere is causing a problem, and we do have climate change, and we are dealing with that. The practical side of me says we are going to be on oil for a while, and this is where I run afoul with a lot of environmentalists. They say, you're writing about like the need to have the Keystone Pipeline, and that just keeps the oil pipeline going. And I said, no, the issue is if we still need oil, and the Keystone Pipeline is not there, we're going to get that oil from Venezuela and Saudi Arabia and those countries. And if we don't need oil anymore and the Keystone Pipeline's there, well, guess what? The company just lost a lot of money building that pipeline. So have that in there as an insurance policy. So am I bullish? I'm bullish for the short term on the Chevrons and Shells. In the long run, I think those companies have to change their business model, but it's going to be a longer time than a lot of people think. I mean, ExxonMobil is going to be in business for a long time to come, and so I tell people there's things that I wish, and there's things that practically speaking, I would say Chevron is a company that's going to continue to do well for a long period of time. It's not going to go bankrupt anytime soon. At the same time, I wish there were economic, I wish we were all driving electric cars. I'd like to see that, but I don't see it happening anytime soon. And so the practical side of me says, buy Chevron. And for people who are complaining about gas prices, I told them, I said, if you bought Chevron stock back, when gas prices started to rise, you could have offset what you paid in gas just by the gains in Chevron stock. So that's a hedge against high gas prices. If you don't like high gas prices, join them. Buy an oil company and join them. I've said before that this divestment move that's happened over the years has cost universities so much money. I mean, Bill McKibben led this divestment. Divest Chevron, divest these companies. Do you know how well these companies have done in the last 2 years, and how much money that has cost all these endowments? I mean, it cost them tremendous, and nobody I haven't seen anybody talk about that. Just go back and look and
that's
say.
That's interesting. I haven't thought about that in a long time, about the divesting movement and what that. Yeah, I guess you could do some calculations on because the universities and the endowments are very proud of this. Oh, of course, we don't want to. These are like tobacco stocks or whatever.
Right.
So, what energy analysts do you follow? Who do you like? When you're reading, who do you seek out? Who you think has a good handle on the markets and on the business in general?
So I follow several. I read all your stuff. I don't always agree with you.
That's okay.
I said before, I think you're the guy that likes to wear the black hat. I mean, you kind of relish being the bad guy. I don't like being the bad guy, but sometimes I am the bad guy.
See, well, that's interesting. I don't necessarily think it is as bad as just I'm just trying to call balls and strikes. What is actually happening on the ground? What are the things that are real that aren't being? Because I see it not being reported. I just wrote a long piece about coal that These are the real stories, and it hasn't changed that much in the 8 years since I wrote Power Hungry and explain why coal's going to stick around. So I don't necessarily think of, I relish being the bad guy, but I do relish trying to tell it as truthfully as I can. But anyway, sorry, go ahead.
So I do follow you on Twitter. Jeffrey Stiles. I don't know if you follow Jeffrey.
Oh, sure. Yeah.
He's probably the person whose views are, and his views are very close to my views. And so we followed each other. Andrew Holland is somebody else that I follow. Some of the Forbes writers, Chris Hellman, the energy editor there, I read his stuff always. Right. And then, I will read the energy news on CNBC and Reuters and so forth. And, there's a lot of sources that I get information from.
Yeah. Javier Blas, I think, is really good.
Yep,
I follow him. I think he's very, and John Kemp at Reuters, I think he's really good as well. So just the last couple of questions, Robert, because we've been talking now for more than an hour, and I don't want to take your whole day. So what are you reading? What I know you've had some challenges lately in your family life and so on. What books are you turning to? What's on the top of your book list?
So I like science fiction a lot. I mean, I like things that cause me to feel like my mind is expanding. Like I'm thinking about new possibilities. So I read a lot of science fiction. I'm reading a book called Seven Eves right now, which is it's about the end of the world, basically, and it's about humans. It's kind of preposterous to think the world is ending and we moved and thrived in space. It's kind of preposterous to think about that, because I think if the world was ending in the next 2 years, and that's what happened in the book. The world was ending in 2 years, but they had this big program where they got people into space, and then 5,000 years later, there's a thriving colony around the world. I don't think that could possibly happen, but it's interesting to think through what it would take, So I like books like that. I like books that cause me to paradigm shift, to think about what might things be like in the future. I like books that focus on genetic engineering and where the human race might go. And I don't read so many energy books. I've read so many energy books over the years that, I'm still halfway through the prize. Every time I go fly somewhere, I take the prize with me and I read a few more pages. So, I guess all energy people should say, yes, I've read that. I've read half of it. I make it a little bit further through there every time I go and get on an airplane.
Well, we've talked about Jurgen's books and other podcasts, but I will recommend his book, The New Map, but read just one chapter. And it's the chapter around the 9-dash map, which explains why China claims the South China Sea. The other parts of the book are very interesting, but that part I think is just really remarkable. And that it explains why China has this claim on the South China Sea. So last question, Robert, what gives you hope? We do face a lot of challenges today. What makes you hopeful for the future?
The country's split. We got a lot of challenges, but still, our lives are still pretty good. Overall, we've still, I'm able to do all the things I want to do. And if you look back in like 2005, there were predictions that we'd be in the Stone Age by now. And if you had told me that
we were running out, this is before the shale revolution. I remember, and I'm not gigging you here, but you were very pessimistic on future oil supplies, and then the shale revolution happened, and this was different.
I wasn't as pessimistic as some, though. I was.
I know.
I was on the oil drum. I was considered an optimist because I was saying, I think there's a 90% chance we have peak oil within 5 years, but there were people saying there's a 100% chance we have peak oil right now today. Right. I said, no, you don't know the future. It's uncertain. I was embattled at the oil drum. I had people telling me, your projections are ridiculous. There is no hope beyond 2010. I got a lot of that. But, shale boom did happen. We have muddled our way through. I think we face a lot of challenges. I think, I worry about the impact of climate change. I worry about where things are headed. Kim Stanley Robinson, I read his book when I had my I had surgery a few months ago and I was laid up for a week, and I read his book about climate change, and it was scary. I mean, to think about the Ministry for the Future. That's it. And in the beginning of the book, there's a heat wave that happens in India that is devastating. I mean, you talk about people being unable to cool themselves off and what actually happened, and you wonder, is that where we're headed? But so far I'm optimistic. We've muddled our way through, and I always suspected And I always told people the Stone Age people, I said, I think we'll muddle our way through and we'll make sacrifices. We still have a lot of discretionary energy consumption. We'll make sacrifices. We'll muddle our way through. And I see a hopeful future for humanity. And I hope that, I know people that think the U.S. is going to fracture and we're going to meet civil war and all that. I don't think that's going to happen. I think, we'll continue to muddle our way through and we'll continue to make medical advances. What makes me hopeful? Listen, you know this. I was diagnosed with ocular melanoma in the summer. And the first thing I heard was, you probably don't have 5 years to live. And I went to the ocular oncologist, and she measured the tumor and everything. And she said, I have people with your situation that had this surgery 40 years ago. And she said, it's very optimistic. She said, it's lucky you were born or you're in 2022 and not 1922. Because she said, in 1922, this would have been a death sentence. And 50 years ago, you would have lost your eye. And here I am, I had a 1 week treatment. It was a very painful treatment, but a 1 week treatment. And they said, you're cured. So that makes me optimistic. Those kind of medical advances make me very optimistic for the future. And it was a setback, but it hasn't impacted my life dramatically. And that's because medical technology has advanced and is getting better at treating a lot of things. And those are the things that make me optimistic.
Well, that's a good place to stop then. I like that story of medical optimism as well. That is key and one thing that is remarkable. Well, Robert, it's been a pleasure talking to you. Apologize for not getting you on the podcast sooner. This was all great to get a rundown on refining and the energy business, and also covered calls. Among other things.
We can talk about that some more later because
I can tell you're fully engaged on it. That's great.
I am.
Well, Robert, thanks for being on the Power Hungry podcast. You can find Robert Rapier on Twitter, @Rapier. You can look him up at Utility Forecaster and on Forbes. So thanks again, Robert. Thanks to all of you in podcast land for tuning into this episode of the Power Hungry podcast. Come back for another podcast real soon. Thanks again. See ya.